Good day, guys. I'm Sonny. Been in a lot of marketing product strategy roles over the last 20 years, done tons of projects for a lot of companies, Kellogg, Nestle, Telstra, Optus, heading up research at Zip, Uber Eats, and many, many others. And I'm proudly, one of the first few investors at Brolly. So today I'm going to be talking about our value proposition in a little bit more detail among the borrower side, among the lender side, and we'll be sharing you some of the learnings on why it is a great time to invest within the business. How's the product, a concept, what have people talked about it, what they like, and just the scalability about it. So if you look at the value proposition, Brolly is all about real-time payments within a mobile app. It allows you to get payments in a secure manner among a trusted community. And one of the things which we do quite well is just kind of make it extremely easy for a lender and a borrower to actually exchange money instantly within their network itself. The platform itself is two-sided. You've got a lender side and you've got a borrower side. And we've got a live product as well, so we'll actually show you a very live demo towards the end of today's presentation. But if you look at the screenshots over here, what you see, the lenders on the platform, they can put in as little as $100 to $10,000 on the platform, and they earn up to 20% annualized, and they get paid out every 30 days. On the borrower side, you can get money from as little as $100 to $2,000, and they just pay a simple flat 5% fee. The lender value proposition is quite straightforward. It's easy. You've got a little bit of money on the side and you just want to invest and make some money and get paid on a monthly basis. It's fantastic. Your money is fully liquid. You can get your money out instantly. So and you'll see this in the demo later as well, that as soon as you transact, you can get your money in your bank account in seconds. And the returns as well, because 20% is actually pretty good compared to some of the other investment products in Australia. On the borrower side, borrowers love the fact that you can get a microloan in less than 1 minute, which is fantastic. The accessibility is also high as well. We're hoping to actually go out to anywhere from international students to working professionals. And our fees is very straightforward as well. We only have a flat 5% fee. There's absolutely no other fees. There is no interest, there is no late fees or any kind of repayment plans like buy now, pay later. And if you reborrow within the same cycle, you can actually reborrow without any extra cost. So very, very transparent. So if you look at this example, how does it actually work? A borrower comes on board, requests a cash loan between $100 to $2,000. If approved, they actually go ahead and the money gets transferred to them in less than a minute. And in this example, if you kind of look on the bottom right, if somebody's taking a $200 loan, you basically repay back $210 after 30 days. If you take a loan of $800, you repay back $840. And we've actually done the price sensitivity testing as well, so people are quite comfortable paying that amount of money. So in terms of what I've just kind of talked about, we see the borrowers pay a 5% fees. The lenders, they earn up to 20% annualized. So how do we make our money? We actually generate our revenue by looking at the 40% spread between the lenders and the borrowers. Now, this is a fantastic time to be working in the category or to be investing in the category. Community lending is also known as peer-to-peer lending. And looking at some externally available research, the first thing we see is there's about a 10x growth between 2022 and 2031. Peer-to-peer lending is going to be reaching about $1.5 trillion. A lot of it is driven by the fact that lenders want to diversify their portfolios. There is a lot of technology changes happening over there, not just in smarter credit decisioning, but AI. Borrowers on the platform are looking for alternatives to banking. And then just the ease and accessibility, right? Things are just getting easier and easier. And these are some of the macroeconomic factors that are actually driving its growth. When we look at Australia, we did a little bit of market sizing. And there's about 17 million Australians aged 18 to 65. But when we start narrowing it down, who are we going after? First we narrow it down to people who are using credit cards, people who are using personal loans, buy now, pay later, and payday loans. That number is approximately 12.8 million Australians. But let's just say we take out the people who are extremely sticky with their credit cards because they get loyalty points and they get, a lot of other benefits. we're still going after about 5.17 million Aussies. And if you were to convert about 4%, just 4% of these, we will be inching quite close to our 1 million target. But a 4% will basically get us about 206,000 users on the platforms. People will always need money. People will need money for emergency expenses, medical bills. People will be needing it for, the utility bills. People will need it for the travel, accommodation. This is something that people have always wanted. However, when they actually need money, our research highlighted that 9 in 10 people face some kind of challenge. Some of these challenges are all about high interest rates or hidden fees or charges. Those are the 2 biggest problems that people actually have. But then other reasons are around inflexibility payment, like I can't pay back, or can I actually pay back later, or there's lack of transparency on the platform, or just the approval process. Some of the banks, they actually take up to a month just to approve a short-term loan. We tested the concept. In fact, one of the first things I did when I actually joined Brolly, I was like, I want to validate the idea. What am I actually investing in? And we spoke to 1,400 people. And the 1,400 people gave us feedback on comprehension. Do people understand it? It had very high comprehension. And I've got a lot of benchmarks because I've tested about 350 odd products in my life. So the scores which you see over here are all moderate to high. Then we did some price sensitivity testing, right, from 3% to 10%. That's why we landed at that 5% mark. Relevance is a long-term indicator of success. Our relevance score also came out quite high, and so did our uniqueness and differentiation. And more importantly, 1 in 2 people were actually interested, in using a product like this. The initial feedback on Brolly has been really strong. People talk about the fact how straightforward it is. They like the fact that we're very upfront, very transparent with the fees. You get access to your funds immediately. And there's quite a lot of positive feedback from everybody we've spoken with so far. We also did some in-depth interviews with potential lenders who might be coming on the platform, because we spoke to about 20 people towards the end of last year. And one of the things which they loved about the platform was the liquidity, that you can get your cash out immediately. They like the transparency. You're always in control, that Brolly is allowing you to actually take out your money whenever you want. They like the smart algorithms and the smart matching that we actually do on the platform. It allows people to actually diversify and enter with as little as $100 or $10,000. Or for the matter, if you're a wholesale investor, you can actually invest much, much more. And it's kind of obvious, but people absolutely love the fact you get 20% annualized. So a lot of numbers on this slide. All right, so just kind of ignore the numbers, maybe look at the colors, right? That's the way I like to describe it. So this is one way for us to understand who's going to use the product. So any number that's more than 110 or higher is basically a group that is significantly more likely than the average Australian to use the product. So what you're looking at over here is this product's going to be skewing towards males. There's going to be more likely to be used by anybody who's a gig economy worker, a small business owner, an early tech adopter, people who are already using similar products to this. Personal loan users, buy now, pay later users, small, medium business loan users, payday loan users. We're also seeing a little bit of a skew in people from ethnic backgrounds and people who are kind of sitting in that bracket between 75 to 150,000 income earners. If you look at the age, we see that the openness to use a product like this starts at the under 25s, but it starts to peak between the 25 to 40-year-old age group. So that's our core target. So those are the people that's going to be trying out the product first. And this is my last slide for today before I can pass it on. But we did a little bit of a high-level customer segmentation as well. Who's going to use it? And the key segment that's going to be using it is basically people who are young digital spenders, early tech adopters, people who are under the age of 30. Their tech savviness is quite high. They just need access to funds and they need it really quickly, followed by people who are small business owners and they just need it for some short-term access to funds to fund their business. Gig economy workers, because they have got fluctuating incomes. And we also found out there's some interest among hardworking parents as well as college students. However, this is much lesser compared to some of these other groups.